Let's bring in Gary Dvorchak, managing director at Blueshirt Group, advises companies on going public, like China. Gary, so what do you make of all these tea leaves? A report in the Journal, a report in Bloomberg that they really are going to change their tune when it comes to regulating big tech in China.
Well, hey, Sarah, thanks for having me on. Obviously on the margin, it's great to see that. And the way I'm looking at it is these companies, look at our giant internet companies and how they're struggling right now in a relatively good economy. Now look at China. You're taking the same gigantic companies that their economy is so dependent on, and literally millions and millions of people work for these companies. And then you're putting on top of that the lockdowns in Shanghai, a much weaker economy in China than the U.S. And so even on the margin with the good news that we're getting today, I don't think we're out of the trouble zone yet.
Down 921 points, another leg lower here on the Dow Jones Industrial Average. Mike, these stocks are so sensitive to any whiff of good news on the regulatory front, on the China stimulus front, because they've been battered so hard. So you've got a Pinduoduo, which is sitting at the top of the NASDAQ 100 right now. It's one of the few stocks higher, still 70% from the highs.
Yeah, I mean, obviously they led us down into this kind of tech bear market. Obviously, very headline sensitive. I feel like they've largely been abandoned by many of the U.S. investors that thought they were great vehicles because they had kind of two things going for them, both China growth and just general FANG attributes. That's kind of gone. So I think they're effectively just trading stocks at the moment, unless you really, have some kind of high conviction that, in fact, longer term, policy is going to change and those markets are going to be allowed to flourish.
So, Gary, what do we need to see to see that? Because you sounded a little tentative, too, in terms of how much room there is for these companies to do better in this kind of environment where China still is dealing with the lockdown and some uncertainty on the regulatory front.
Yeah, well, I think the central government is going to support them from this standpoint of reducing the regulatory burden and a lot of the cybersecurity investigations and things like that. The biggest overhang is still going to be the uncertainty around the audit issue, because that is not resolved. And frankly, the biggest risk right now to those stocks is what the SEC does, because there's a good possibility they'll accelerate the deadline for the PCAOB compliance. And if they move it to this year instead of 2023, that means that basically means two audits that are non-compliant and you're delisted. That means this year's audit has to be compliant. So all these companies have to really scramble to solve their audit situation if that gets accelerated, if the governments don't resolve the issue.